What's going on, everybody? Welcome back to the FX Tycoons channel. My name is Nathan Williams. You can find me on Instagram at Nate Got the Bag, Facebook, Nathan J. Williams. All right, today I'm going to walk you guys through how I used the tools that I created to actually catch 3,000 pips. All right, 3,000 pips on US30 in 8 minutes. All right, 8 minutes, over 3,000 pips in 8 minutes. All right. If you guys know, if you're watching this video today, US30 fell over 10,000 pips from top to bottom. It ran up at New York Open and it dropped 10,000 pips from its height. I'm going to show you how I caught 3,000 of those 10,000 pips. Caught it from my phone, but I'm going to come in here and show you guys how, in the video here on my charts, show you guys what I saw, what I looked at. All right. So you guys can learn. All right. So jumping straight into the charts. All right. I've got two indicators, guys, that I've created. All right. The first indicator is the MEM indicator, M-I-M. All right. What is project? You guys might see I've been talking about Project MEM for a while. MEM stands for Market Institutional Maker. So this indicator is there to help you, and it's going to come with training to teach you around the lines of what? Trading the market maker method combined with institutional trading. All right. So we're going to combine the best of both worlds. All right. And then my other indicator, as you guys may have known me for, is AIRO. All right. AIRO, AIRO. All right. This is shout out to strategy number 11. Strategy number 11 was the confluence needed. All right. But I traded naked from my phone and I was able to set up the majority of this MEM indicator on my phone. So this is the move that I caught right here. All right. It's the move. You see, this is that 10,000 pips I was telling you about. I caught 3,000 of this move. All right. My TP was in this area right here. All right. And I caught it from the top. All right. With 3,000 pips, 3,500 some change. All right. So let's rewind and go back to find out why. Why did I take the trade up here? Why did I take that? All right. Well, first of all right, two things, all right, that really gave me the know-how, or I should say know-how, the actual indication that we're about to go for a nice sale. All right. Number one was, as you can see over here, I'll put it right here. So all three wicks touch it. These are equal highs. All right. So from yesterday's high, this is yesterday's New York session high. As you guys know, US30 is a New York session pair. All right. New York session pair. So yesterday, New York session, the start of New York session, this is the equivalent highs. 1, 2, 3. All right. If you want to learn more, make sure you subscribe to the channel. I'll teach you more about that. I will also be having, I'd say once MEM launches, there'll be a course that launches with it. All right. To teach you how to trade the institutional and market maker method combined. All right. So as you see here, you have what? You have equivalent highs. All right. So price at New York Open, this is New York Open today. It bounced off of, as you can see here, it bounced off of what? It bounced off of Asia session from today and took off. If you want to know why, again, subscribe to the channel. We'll talk more about that. Also, make sure to join me, link in the description, and I can teach you more about Asia high, all right, or just Asia session and why it's important to indices. All right, so you can see here, price bounced off of Asia high at New York Open. But of course, what goes up must come down. But how did I know it's going to come down? All right, because equivalent highs. I'll teach you more about that later. But boom, 3 wicks here, equivalent highs from yesterday's New York session. Came to that. That was number one, the equivalent highs. All right. Then at the equivalent highs, all right, let's zoom in here. At the equivalent highs, you can see what? All right, you can see, let me come in here and we'll zoom in for everybody. After the equivalent highs, you can see here that we had a doji, a bearish engulfing candle. 2 dojis at a key institutional level, followed by a bearish engulfing candle. So my entry was right at the bottom when that closed. So let me take away this candle right here, take away that line from the equivalent highs, just slightly below. So it closed below the equivalent highs, and right there is where I got in. All right, so I'm in right there. Now, I'm in. And you can see here, my TP was in this area right here. Now, why was my TP in that area? All right, because after this uptrend here, I'm expecting a downtrend. So let's go throw the fibs on. Let's go throw Fibonacci on. All right, we're going to go throw Fibonacci on. Let me zoom out a little bit here. All right, We'll go throw Fibonacci on. So I'm going to go from swing high to swing low. And that swing low is going to be right here because that's the bottom of Asia session. All right. Why is the bottom of Asia session important? Hey, I'll teach you about it. Come check it out. Now, look at where that landed. That key level right there. That's my TP right there. It's right there at the 62 fib. I round up. I'm a math major. So 61.8 bothered me. So I rounded it up to the 62. So the 61.8 fib level, or what I call the 62, is a key Fibonacci level. All right. That was my TP. Obviously, I left a lot of meat on the bone as this thing fell another 7,000 pips. And I only caught 3,000 or 3,500. All right. But as you can see here, it came down to that Fibonacci level. All right. Very quickly. All right. Now, that's it. That's the sauce. This is a project mem. All right. One other aspect, if you come over here to AIRO, you can see the exact same thing. This is why the team is winning. Project mem and AIRO, they're all built together as far as the actual way that you trade them. Because AIRO, these zones are all institutional zones. If you actually go utilize the software, you'll see that all the zones from AIRO, for the most part, will match up with key order block levels, key FEG levels. All right. If you don't know what that is, come learn. We'll teach you. It's all about having the knowledge. All right. But if you see here, strategy 11 teaches us, again, the strategy 11, when you have an M formation on your stochastic down here in the cross, and that cross on the fourth leg of the M, you see leg one. All right. You see leg one right here of the M. Boom. You see leg two of the M. Boom. You see leg three of the M. Boom. And then you see what? You see leg four of the M. So you know it's come back down to this level of oversold. Right now we're overbought and we're up here at the 100%. It can't go any higher. All right. So what you're waiting for is for that cross down of the blue line over the dotted line here. And you want to match that up on the chart. Price had a V. You can see here, look at his head and shoulders. Zigzag, shoulder, head, shoulder. The head coincided with the cross of the what? Of the stochastic here for the binary ATM. All right. Yes, you can use this tool for binary trading. Come check it out. Strategy 11 AIRO. All right. And this candle right here, as you can see here, this candle right here. Let me go ahead and let's do a vertical line so you guys can see it. All right. Pull this over here. This candle right here, look at that. It coincided with the cross down. That was my same entry here. Boom, right there. Same entry. All right. Doji, doji, bearish engulfing. I'm in next candle. That same candle had the cross. It came all the way down. So AIRO gave me the entry and the MEM indicator gave me the entry. All right. 3,000 pips, 8 minutes. It's easy to do. Let me teach you how to do it. All right. Come check it out. Appreciate you guys watching the video. See you guys in the next one.